Cathie Wood just bought more Tesla stock today, $2.3 million. And also she explained why she has been buying Tesla stock lately. She still has room for $270 million more. So I expect to see Cathie buying a lot more Tesla stock over the next days and weeks and months. It is not just Cathie Wood buying Tesla stock today. Also, Gary Black purchased Tesla for his fund, which now became his biggest position again. It was number 2 because of the recent drop. Here is Cathie's latest explanation, a more detailed explanation specifically why she's buying Tesla stock. This article has been written on January 4th, and it is based on the interview that happened just before the new year. So let's see what Cathie has to say. Cathie said that Tesla can rise to $1,500 in the next 5 years, and that the stock has miles to run. Now that is quite bullish. Musk's management of Twitter has been controversial, and Wood thinks that could turn off some car buyers, but those reputational issues are dwarfed by Tesla's manufacturing, technology, and materials advantages, Wood asserted. She thinks Tesla will be able to cut price on its Model 3 to $25,000 in the next few years from about $45,000 now and still make wide profits. Tesla is making much cheaper batteries than other car companies, and that is a huge competitive advantage. Yeah, of course, that is definitely a huge competitive advantage. Now, a $25,000 Model 3, that would be quite surprising to see. I think Tesla is working on the next generation platform, which would bring us that hopefully $25,000 car, although with all the inflation, it might be maybe $30,000. But we need to understand the full context why she's saying that the Model 3 sold at $25,000 could still be super profitable. She says, I think there are people who won't buy his cars now following the Twitter takeover. She said, but if he does what we think he's going to do on the cost side, there are a lot of people who will use economics as their guide. Better car, better economics. And I think there are a lot more of those people than there are of the naysayers around Twitter. And that I fully agree with 100%. There are always going to be some very loud people that will show you that they canceled the Tesla car order just so that they can make themselves feel a lot better because, of course, they are doing the right thing, supposedly. But I personally find when people are presented a better economical choice, whether let's say it's an employee who, let's say, says one thing and then is offered to be paid a little bit more money, and suddenly they reverse their opinion completely very quickly. Money changes things. And this right here really sums it up very well why Cathie is still buying so much more Tesla stock. Wood also expects Tesla to have a fully autonomous taxi available across the country by 2024 and to win the lion's share of that business as competitors roll out more slowly. The taxi business should be much more profitable, well, not should be, but it will be much more profitable, I believe, than Tesla's core operations are today. It's an 80% plus margin just for robotaxis, says Cathie Wood. Combine that with their electric vehicle margins, which are 25 to 30%, and we have a 60% plus gross margin company. No one has that in their models. We do, says Cathie here. As Cathie's fund has struggled, she has reduced the number of positions that she held from 58 names to 30 names now, and of course Tesla being one of the biggest positions, and soon probably to be the biggest position again. For all of those who are really hating on Cathie Wood, I would like you to take a look at this. From inception in 2014 through the third quarter of 2022, the Innovation Fund was trailing the S&P 500 slightly on an annualized basis, 9.67% to 9.74%. So they have basically provided the same returns. And this is after the astronomical fall of the fund. It dropped 80%, and yet it has still produced profits from inception. So despite her many critics, Cathie still has this very high conviction, and I have to say that I have to respect that. It's one thing to be bullish when all of your positions are at an all-time high, but it's another thing entirely to do so when the portfolio has dropped 80% from all-time highs, but so many people forget it's still up from the moment the fund was founded. I really respect Cathie for going against the wave and buying more Tesla stock. I mean, there is so much volatility right now. We just had another really high volume day, although when I zoom in just a little bit, it looks like a normal day. But when I zoom out a tiny bit more, and it's like, whoa, there's a lot of volume going on here. We have some good news also with the inventory. As you can see, the inventory has fallen sharply in one day here. I haven't really seen anyone talking about that on Twitter. Everyone is just focused on the short-term noise. This is what matters a little bit more right now. Fundamentals. Inventory here is shrinking. And for Model 3s and Ys, if I just look a little bit further back, you have to remember some people just cancel their car and they don't want to take delivery, and then that car does go to inventory. So this is what a healthy inventory level sort of looks like based on historic data. And for Model 3s and Ys, we are a little bit below that right now. It will be interesting to watch how mega packs are going to impact the bottom line for Tesla this year. Gary Black says, remarkably, this is still not on the sell side's radar, although buy-side portfolio managers are talking about it. It is almost as if we reached a point where everyone is just so negative about Tesla that they can't see anything positive about it anymore. Even things that are perhaps rather obvious. All of this, of course, could have a huge impact on Tesla's bottom line. It reminds me a little bit of a time when Tesla just had their Model S and Model X. I was not an investor back then yet. And there were analysts that were talking about that maybe Tesla should just stick with really high-end luxury vehicles. It has no business entering this Model 3 kind of type of segment. Well, that aged really well, right? And check this out. In the US, Tesla grew at about 48.9%. And everyone else, if you are on mobile, by the way, you can zoom in like that with your fingers. Everyone else mostly has lost. It's not good. Nationwide, it was minus 8%. Of course, Tesla grew by a lot, and Tesla is already a pretty sizable automaker in the US. So it's not like, Lucid making a few vehicles and then the growth is 336%. Rivian is a little bit bigger, but still relatively really very small. And we can see now that Tesla is actually ahead of BMW in number of cars sold in the US. A lot of these automakers are in a very bad situation where, well, the sales have stopped growing and they pretty much have no hope when it comes to electric vehicles. This data right here, if you are a new investor, you will look at this and it will look really bad because we have more and more people being fired and laid off. So how come this is actually good? Well, this is actually good because the Fed is more likely to stop increasing rates, perhaps even cut the rates, which will then help Tesla sell more cars because the cars would literally be cheaper. And it would certainly, in my opinion, would help growth stocks like Tesla. Although a bad recession would actually probably be the best thing that could happen to Tesla, the company, not the stock, but the company, because Tesla would increase its market share by a lot while everyone else would be shrinking. Bad for the stock short term, though. And if you want to make yourself feel better, well, just read this. I do have family still over visiting. I should be back to making more videos probably on Monday, maybe as soon as Sunday. We are staying a little bit longer than expected, and I will have more family visiting probably around January 20th or so, for maybe a week. So there will be less videos around that time. And this right here is the buying opportunity of Tesla stock explained by Elon Musk. My name is Matt Postis. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.